Scott, what exactly is driving the markets right now?
Well, I mean, I think in the very near term, obviously, the G20 is incredibly critical. However, I would stress, I think there's multiple layers of this negotiation and of geopolitical risk. So geopolitical risk is going to be a huge driver. If we get some relief, and I think the most we could expect is an agreement to talk on to further the conversation.
Between U.S. and China?
Correct. I think
is that a positive for the markets?
Well, I mean, I think it's what they're beginning to expect.
Right.
Right. I mean, look at risk assets, stocks, et cetera. So I think you have that immediate relief is going to be very important, and then obviously more concern or thoughts about monetary policy easing, which has become obviously a very important factor.
I mean, how linked are the two? So are central banks around the world getting used to this sluggish growth that could lead to a significant slowdown with an environment of these trade tensions lasting for the next 5 to 10 years?
It's an incredibly important question because what's happened, it looks like, is that the concern around geopolitics has transmitted into the real economy. Right. And that's the issue that central banks are dealing with, is how do we deal with that kind of shift in sentiment, both in the asset markets and in the real economy. And so that's the transmission mechanism.
But is that in CapEx? Is it that chief executives are just not spending, or is it something a little bit firmer?
Yeah, I mean, I think it's both in terms of forward-looking, but also if we look at things like manufacturing in the U.S., we have seen a slowdown. If you look at trade volumes, we've seen a slowdown. So there's some factual things that are working its way in the economy. The question will be, though, is if we get relief from this, let's say the G20, or if we get a more kind of acquiescence between the two parties going forward, does that relieve some of the near-term tension?